Hello and welcome to another session of the Marcelo 401k Financial Daily Webinar Series. We're excited today to get started. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So thanks again for joining another solo 401k session. This is our second session of the day. It's a live Q&A session, so if you brought questions or have topics that you wish to discuss, please chat that over now so that we can be sure to get to them all. We go live every day with prepared content. Today's topic is no platform lock-in, the best solo 401k built for registered investment advisors. So again, though, if you have other questions or topics you wish to discuss, please chat that over now so that we can be sure to get to them all. And as we go through these topics, if this information is helping you feel more secure about your retirement, more confident, it's going to help others like yourself, other advisors, other solopreneurs. So if you please like this video, whether you're watching this on LinkedIn or YouTube or X or Instagram, that would be greatly appreciated, as that'll help us to get the word out to other solopreneurs like yourself. So with that, let's jump in to some slides. So let's go over some of the objectives. So we want to understand the My Solo 401k financial model, mysolo401k.net, talk about eligibility to set up a solo 401k, talk about what makes us unique and super compatible with advisors is our open custody structure. We'll talk about some deadlines and for contributions as well, since that's always a hot topic this time of year. We'll also highlight some of the top reasons, some of the top use cases, some of the top features, why clients and their advisors are setting up solo 401k plans with My Solo 401k Financial. Now, how my Solo 401k Financial is different is that we have no platform lock-in, but at the same time, we offer the most advanced solo 401k plan on the market. We provide full solo 401k compliance support. Our fee structure is also very compatible. In other words, we don't charge a percentage of the balance, and it's very competitively priced as well, which of course is always going to be important to solopreneurs who they themselves are always looking to make sure they maximize the value for the services that they do pay for. So we're an IRS approved plan provider. Again, we've got all the features, right? Whether that's Mega Backdoor Roth, the ability to take a solo 401k participant loan, $1,500 in solo 401k tax credits, the ability to invest in alternative investments. So for example, we were the first solo 401k provider to offer a solo 401k plan that supports the Mega Backdoor Roth. So no one's going to have more experience or knowledge in terms of making Mega Backdoor Roth solo 401k contributions than My Solo 401k Financial. We were the first solo 401k provider to offer a plan that supports the tax credits. So we did that at the end of 2023. Now you finally see other companies in the space that are rolling out their plan that's eligible for the tax credit, which is great because that gets the word out to other solopreneurs so that they can take advantage of those credits, which makes it very affordable to set up a plan. For example, those tax credits amount to $1,500, which is going to more than cover our fees for the first 7 years. So it's a no-brainer, for example, because you get all those advanced features, the advanced compliance support. So for example, once the value of the plan exceeds $250,000, there is going to be an informational filing requirement that applies, which is referred to as a Form 5500 EZ. So we handle that Form 5500 EZ for no additional charge, and we do it under the electronic filing system to make it easy for the client, to make it easy for the advisor, to make it easy for all parties. Now, we focus on providing that advanced solo 401k plan and the compliance support. So we don't hold or have access to our customers' accounts. So that means we're very portable, right? We're neutral as far as where the accounts are opened up at. So we're not forcing or encouraging even clients to open up accounts at any particular institution. So if the advisor custody is at Altruist or LPL or Schwab or Fidelity, we're totally compatible with that. We're happy to have customers and their advisors open up accounts wherever they choose. So no platform lock-in. We don't have access to the funds. We're not trying to manage our customers' money. So very complementary to advisors. The structure is compatible. So we can handle the advanced solo 401k plan and the solo 401k compliance support, and the advisor can provide all of their good services to the end user. So that goes again to that open custody model. Documents first, custodian second. So that means, for example, that the process is to start with our solo 401k application, which is just takes a minute to complete, can be completed by the advisor, of course, by the client. Now, a good tip would be to include the advisor's name and email address along with the client's information when submitting that application. So it's just a quick 1-minute application, just straightforward information, right? The name of the customer, the name of their business, 10 simple questions. The last question asks for the name of the plan. So we recommend using 2 words in the word trust for a total of 3 words. So that's a free form text field. So additional notes can be added. So let's say they call it sample wealth trust. So the advisor or the client can then add in, okay, please copy the name and email address of the advisor. That way we copy the advisor on communications and everyone can have access to the process. So once we receive the application, payment is made, an email goes out that same business day with a link to the documents that were drafted specifically for the solo 401k owner's business, so the solopreneur's business. So the client, the advisor that's copied on that email will have access to the secure portal to access the documents. So they just simply download the documents, sign those pre-filled documents. So the cover email specifies where to sign, upload the signature pages. So there'll be a secure upload link in that same initial email that goes out the same business day when they sign up. And then there's going to be a third link in there where the customer or the advisor can let us know where they want to have the accounts opened up at. So they could choose from the drop-down menu, Altruist, Schwab Institutional, Fidelity Institutional, etc. And then we'll guide the client and the advisor through the process to open up the accounts. For example, even preparing the paperwork that might be required to open up the accounts at the custodian of choice. So supported brokerages, this is just a partial list, right? We are totally neutral as far as where the accounts are at. But again, that could be Altruist, Schwab Institutional, Fidelity Institutional, LPL Financial, Edward Jones, among others. Now, it's always good to make sure that the client is eligible to set up the solo 401k so that there's no false expectations that are established. So a solo 401k is for an owner-only business. So think like a freelancer, maybe a graphic designer. Really, the nature of the business is not relevant. What's key is that the individual reports earned self-employment income on their taxes with no non-owner, non-spouse, full-time W-2 employees. So earned self-employment income, there's different ways to report earned self-employment income. So let's assume that the business is a sole proprietorship, so there's no formal legal entity. In that case, earned self-employment income would be income reported on Schedule C of the 1040. But let's assume that the business has graduated and now it's an S corp. In that case, earned self-employment income would be income reported on the as a W-2 from that business taxed as an S corp. Or same with a C corp, it would be W-2 wages. Or let's assume it's a partnership. In that case, earned self-employment income is income reported on line 14 of the K1 from the partnership. The other piece of the eligibility equation is that there cannot be any non-owner, non-spouse, full-time W-2 employees. So a full-time W-2 employee would, of course, mean a W-2 employee as opposed to a contractor. So if this solopreneur themselves has independent contractors that are working for them, that's not going to prevent them from being able to set up a solo 401k. They could even hire W-2 employees as long as they're not working as full-time W-2 employees. So a full-time W-2 employee would be someone that works 1,000 hours or more per year with a year of service, or 500 hours or more per year for 2 consecutive years. Now, note that they could have their spouse working in the business, and that would not stop them from being able to set up a solo 401k. Now, this time of year, at the beginning of the year, you still have individuals that want to be able to make 2025 solo 401k contributions. Now, ideally, they would set up the plan by the end of the tax year. So, for example, by December 31st, 2025. If they did set up a plan either with us or somewhere else before December 31st, 2025, they would have locked in the ability to make all types of contributions for 2025, including employee, employer, and voluntary after-tax contributions by their business tax return deadline, including any timely filed extension in 2026. But if they didn't set up the plan either with us or anywhere else by the end of 2025, they can still set up a plan here in 2026 and make 2025 solo 401k contributions. Now, they won't have the most time and the most contribution types available like they would have if they had signed up by the end of the year, but they still might have some good options on the table. So, for example, if their business is taxed as a sole proprietorship, could be an LLC taxed as a disregarded entity that's taxed as a sole proprietorship. Technically, they could still open up a solo 401k and make all types of contributions, even employee contributions. Now, they would have to make those employee contributions by April 15th, 2026. If they file an extension for their 1040, then they could still make employer and or voluntary after-tax contributions by October 15th, but they wouldn't be able to extend the ability to make employee contributions if they didn't set up a plan until 2026. Now, for other types of businesses, S Corps, partnerships, C Corps, while it is too late to set up a new solo 401k in 2026 and make the employee contributions for 2025, there's still time to set up a solo 401k in 2026 and make at least the employer and or the voluntary after-tax contributions for 2025, as long as they set up the plan in time to make those employer and or voluntary after-tax contributions for 2025 by the 2025 business tax return deadline, including any timely filed extension in 2026. So, for example, for those that are just focused on making Mega Backdoor Roth solo 401k contributions, even if they didn't set up the plan by the end of 2025, they could still set up a plan regardless of their business type here in 2026 and make those voluntary after-tax contributions for 2025 all the way up until their business tax return deadline, including any timely filed extension. So in other words, the 2025 Mega Backdoor Roth strategy is totally on the table still. So again, the role of the account provider, that's going to be Altruist or Fidelity or Schwab, wherever that advisor custody is at, is really just to provide the account. They're providing the custodial platform. We, my solo 401k Financial, we provide the documents, we provide the vehicle that gives access to all those advanced features. So again, we're totally neutral as far as who the custodian is. Advisors can custody those accounts at their custodian of choice. And then as long as that custodian will support accounts for third-party solo 401k plans. So those advanced features, we've talked a bit about the Mega Backdoor Roth. There's other ways to maximize dollars in the Roth account. Could be Roth conversions, for example, where the individual is transferring funds from their pre-tax account to their Roth account. Solo 401k loans, that's where the solopreneur can literally withdraw funds from their solo 401k account, use it for any purpose whatsoever. Could be a personal purpose, a business purpose. It's not going to be subject to taxes or penalties as long as it's within those loan terms. For example, limited to 50% of the balance, not to exceed $50,000, documented as a solo 401k loan. We prepare the loan documents as part of the service for no additional charge and paid back according to that payment schedule. So the payment schedule is going to require that it's paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. And then, of course, you've got access to alternative investments because our plan would allow for that, whether that's real estate, crypto, $1,500 in tax credits. So that's going to apply for both new plans And even existing plans that are upgraded to our plan would be eligible, the business owner would be eligible to claim $500 of tax credits for 3 consecutive years for a total of $1,500. Those are true tax credits. So it's a dollar for dollar reduction in the tax liability. It's not just a tax deduction. So that's going to more than cover our fees for the first 7 years. And then, of course, the 5500EZ and 1099R compliance support, which we offer for no additional charge. So customers or their advisors just have to let us know, for example, once the value of the plan exceeds $250,000, and then we'll add their plan to the queue to take the client through that 5500EZ filing process, where we end up preparing the form in the electronic filing system, to make the e-fast system, to make it easy for the customer, the 1099R compliance support. So a 1099R, for example, is going to apply if there's an in-plan conversion or a transfer out to another retirement account or even a taxable distribution. So again, customers that are advisors, just let us know when there's an event that requires a 1099R. Mega Backdoor Roth would be a scenario where a 1099R is required. And again, we handle that for no additional charge. So there you go, the $1,500 in tax credits. So that's for having a plan that includes an auto enrollment feature. But the solopreneur has the option to opt out of the default 3% contribution percentage that's established as part of that auto enrollment feature, and they would still be eligible to claim the credit. Just because they're exercising their rights to opt out of the default doesn't mean that the plan doesn't have the auto enrollment feature. It, of course, still does. So compliance support. One of the good things to recognize is that the fees, the late filing fees, really the penalties, I should say, for failing to file the 5500EZ increased dramatically under the Secure Act. Now it's $250 per day. So that can add up very, very quickly to thousands of dollars. So that's where it's going to be super important to make sure that that's handled. And again, all that the customer, the advisor needs to do is let us know that the value exceeds $250,000. Then we'll add the customer's plan to the queue to take them through that 5500EZ filing process. The online application process, again, very simple. It's just a matter of completing 3 steps, right? Complete the quick 1-minute application, payment is made, then we will prepare the documents within the same business day. Email goes out within the same business day to the client, copy the advisor, as long as that advisor emails on the application with a link to the secure portal to access the documents. Okay, wonderful. Thank you so much for listening to our session today. Again, if this is helping you as an advisor, as a solopreneur, it would be fantastic if you like this video, because that's going to help us to get the word out to others just like yourself who might be needing this information to help secure their retirement, the retirement of their clients. Now I want to go to a question. So a good question here from Michael T. 3 partners of an LLC, taxes an S corp with W-2 and distributions as income should qualify. Yes, as long as there are no non-owner, non-spouse, full-time W-2 employees. And so as long as each owner is at least a 3% owner. All right. Well, it looks like that takes us to the end of the session for today. Thank you so much for joining today's session. We greatly appreciate it. Again, please like the video to help us get the word out and help us grow this community. Please also subscribe so you get notifications of when we go live. We do go live every day. This is our 2nd session of the day. That way you get notifications of the content. You can come and ask questions and just keep engaging. Thank you so much. Take care, everyone. Take care.